All right, welcome to Burn Rate and Beyond. We are here on episode number 10. My name is Chad Fultz, and I'm here with the always happy and cheerful Mr. Jeffrey Mazza.
Hey everybody, nice to be here.
Excellent. Today we're going to talk about preparing for economic uncertainty. That is the topic of the day. And there's been a lot of I don't know, whatever you want to call it. Bad news lately, apocalyptic, war, tariffs, lots of complex stuff going on in the world right now, and so there is definitely some uncertainty to think about. And here we are. How do we deal with that as business owners and leaders? This I guess this topic is pretty closely related to what we did in a previous episode, episode 5, about risk management, and I guess the first thing was like, okay, basically economic uncertainty are risks, right?
hmm
And so, what's the difference between what we talked about in episode 5 and what we're talking about today? I guess let's
Yeah, I
start
mean,
there.
that episode was great. It's such a relevant topic as they all are, but when it comes to, like to say, the economic certainty, really, I mean, it's more of a broader perspective, right? I mean, there's a lot of, let's say, moving pieces and factors. It could be local, it could be, global, that really could have an impact in, certain businesses for sure. But it's to me, it's much more broader, and a lot more, I would say, variables that could affect it than, say, let's say, domestic and wherever you're located.
Okay. You know what? When we talked about in episode 5, I think some of the things we talked about were like just it was just risk management, but that could have been any type of risk. So it was like you might have like a key employee risk or a customer concentration risk or an IT security risk, and how do we identify those and evaluate the reactions that we need to take to those particular any particular risk that's identified. And so these risks, I think, when I think about economic uncertainty, I think, like you said, it's like at a global scale, or it's just like a macroeconomic scale. Um, and actually, I heard a funny kind of a funny quote about the difference between microeconomics and macroeconomics, and one of them was that microeconomics is when your neighbor loses their job, and macroeconomics is when you lose your job.
That's
Because it's
good.
all like what matters most, right?
That's
So,
awesome.
but actually, no, seriously, the there's an interesting. I guess there's a to try to think about what the difference is also what am I looking for here? The difference between macro and microeconomics. Do you have any thoughts about that, or just to kind of help people understand like these global things and like how do they affect me? I'm just like a small business person, and it doesn't really matter.
Yeah, I mean that when those macro and microeconomics, right? I mean, even micro, it's just as what micro is, it's more of that smaller, um, kind of if what is it, the pizza, it's like more of the slice of the pizza, not the whole pizza, but it's the guy on the row is kind of raising his prices or something, right? And that's more of the finite and the micro, but the macro is more of that whole pizza, right? It's everything. It's more like the why is cost just increasing in general, like across the board, and not just one specific kind of area. I mean, both are important, but it's the focus has been on, I think, more macro, especially now in the current events taking place.
Yeah. What's actually that makes me think of a podcast. No, I guess it's not a podcast. It was an NPR episode of Stacey Vanek Smith a couple of years ago, and basically the topic was it's called the magic price, oil's magic price. And I thought it was a super interesting topic about like, well, where did these prices come from? Is it like, a bunch of sheiks in the Middle East, they're sitting around a table drinking tea, making up the price, and like today Brent should be $10, or no, it should be 150, like, or is it some other like actual market, like things happening? And what they tied it down to was a very specific example of a guy who, what is the word I'm looking for here? He is this guy, a guy named Jason Bruns, and he was a farmer, as I understand it, but on his farm he actually had an oil well,
Oh
and
wow.
so he's like, okay, well, if and I don't remember the actual price point, but he's like, if Brent gets below $85 a barrel, I don't make any money. So there's no point in me pumping oil that I can't sell for more than $85 a barrel. I'm not sure if it was 85 or 50 or 100, whatever. It doesn't really matter. But the point is that he would watch that, and he's like, okay, when it gets above that, I make money, and so I'm going to produce more oil. And so the nuance is like this is like this macroeconomic thing of how where the price comes from, but it's definitely affecting that one little guy. And he's like, I understand the economics of my business well enough to understand when I make money, when I don't make money. And if there's thousands or millions of these individual guys like that who are all coming online right as the price gets to a certain price point, then then of course supply goes up, um, prices go back down, and then he ends up shutting it off or whatever, right? But it's a barometer to say, okay, well, here's a macroeconomic situation, and I'm going to act on my specific business in a very specific way to react to that. So,
That's
other
interesting. Yeah.
like dynamic between the two worlds of macro and microeconomics.
That's great. I mean, that's such a good analogy too. It's interesting that he has an oil well in his farm.
And he could do just fine without it, right? Like, obviously any extra income is good. So I guess the other thing is like so when we are talking about these big things, what are the major factors? Obviously, oil prices, play a role in like supply chain. What other things can you think of that make play a big role here?
Yeah, I mean, I would say a bunch, but like you said, oil, there's it's involved with a lot of different in our everyday lives, for the oil for gas, whether it's airlines and our commercial vehicles and just our own vehicles. But inflation, that's a big one too, is the value of that dollar, how much you can actually spend, is a big drive. But interest rates, that helps drives that, labor market shifts. I mean, there's a lot, and I know a lot of the governments produce these macro numbers, honestly quite almost daily, but different ones get kind of announced every single month, but it helps drive even markets, and all that is very key. But when there's a lot of I would say pressures on both sides, both positive and negative, I mean that stuff just fluctuates up and down, and thankfully that's not my job or anything to kind of navigate raising rates, reducing rates, because that's a I can't even imagine that challenge. But it affects so many different things. So when you look at inflation, interest rates, supply chain, and oil, and all of that, but there it affects it. So there's good things and bad things that come about when things are going well and things are going bad.
Okay, yeah. So I guess, and do you have any concrete examples or just good thoughts about the idea of like, I mean, the whole topic here that we're talking to today is preparing for this, right? So
Mhm.
cool, inflation, it's happening. What can we do today to prepare for an increase or a decrease in inflation, tomorrow or next month or next year? Like, what's like a way to go through to I guess it's just all about preparing, right? Like, what's a good action item on that or any of these major topics we've identified?
Yeah, because I mean, when you start, I mean, even in episode 5, when we talk about risk management, right? It's really trying to understand like the business itself and who you deal with, both from the customer side, both from the other supplier or vendor side, and depending on the different business. But I mean, if there are supply chain and there's purchasing of certain materials or products that are coming even domestic, but more so international too, that could really lead to maybe delays or higher costs, and but even lost sales. But interest rates, I mean, that kind of just drives cost of capital, things, it makes growth more expensive, right? And even inflation, it just erodes the purchasing power. But the margins really get affected by that too. So when we say like to really kind of minimize or be proactive is really paying attention to the macroeconomics of both the domestic whatever country you're in, but also just international too, because if you deal in that space, it does affect it. Meaning it's looking at the supply chain, like, if you are dealing, overseas, like what will happen if that, gets skyrocketed and there's supply chain delays? Like, can you source that product somewhere else that are, it's equal, the same, quality that you've been producing? What's your plan B there? But even
Hmm.
rates, if you're looking to, fund the business for growth capital and you need to obtain some funding through interest rates there, that, if that starts to increase, well, it starts to get more expensive too. Maybe there's, if there's, potential rate hikes in the near future, then maybe we should, start looking at some funding options now to lock in a rate, things like that. But inflation just makes purchasing power, it just gets eroded pretty fast. So you know, maybe some customers really aren't buying as much anymore. And that might affect business too. So there's a lot to think about when you start dealing with the macroeconomics here for not only the economy but just your business itself.
Yeah, and I guess that's the thing, like the like that you were saying the thing that made me start thinking a lot there was the inflation eroding purchasing power. It's like, so great, what do you do about that? Inflation has made things expensive. Like as a business owner, inflation has made the things you buy more expensive. Be it your software, the people you're paying, whatever it is. Like that, so that eats into your margins. You have to pass, in order to maintain your margins, to pass that cost on to your customers. But if their purchasing power has also been decreased, is it, that's where you get into that like endless spiral up, where it's like, okay, well, they if they can't buy as much, how do you maintain your business? Do you have to either increase prices more because less people are buying? Do you have to decrease prices so more people can buy, but then
Hmm.
you have to lay more people off so that you can maintain your margins? Like it's a very fine line to walk when you're talking about increasing prices and where the trade-offs long term. So I guess that also makes me think, because I guess the big challenge here is like the crystal ball, right? Like I
Yeah.
think the Fed just kept the interest rates pretty flat, right? Um, okay, so what do we do here? Do we do we do we take, is that a sign of a good sign or a bad sign, right?
Yeah, and I think also looking at the economy in itself here, just to see even consumer sentiment. There's a lot of key data out there that it kind of gives some idea, and even then, yeah, keeping rates kind of the same, and then hearing there could be some rate cuts maybe in July next month, and it's like, okay, well, what does happen, right? From a business standpoint, and like you said, oh, you can raise prices, and there's ways I think strategically you could do some sort of price increases if you're right, because it shouldn't be back on the business of just because that's taking place. Like you shouldn't do anything or not do anything, I should say. But like there's different ways to bundle in products or something and discounts that you could probably do and raise some prices strategically on more higher demand items and those sensitivity ones or something first, things like that can really help offset some of this cost. Um, but yeah, I mean, you look at in the news and CNBC, Bloomberg. I mean, there's a lot of data that's out there that's being talked about every day. To me, it's really just proactive and not reactive when it comes to the business, because all of these macroeconomic factors can have some impact on that business, whether it's worse than others, but it will affect at some point both service and product-based businesses for sure. Um, but just understanding the business, right? I mean, it really helps being proactive and the thought of trying to minimize. I mean, these are all for-profit businesses, so it's trying to make money and not to lose money. So taking some of these measures is going to be key. Um, but Yeah, I think that's
And I guess that another interesting point there is just that cadence, right? Is I think there's like we meet with a number of our clients on a monthly basis, and one of the points of talking to them on this regular basis is almost to be like, okay, well, you've been focusing on a lot of things of the business on a day-to-day basis, be it customer problems, vendor problems, product problems, whatever it is. If you're out looking for funding, you see like raising capital problems, but coming back and just thinking about like the functioning of the business model is part of the fundamentals of looking at the financials every month and saying, okay, well, cool, we've looked at them. Let's just say our margins are decreasing. Okay, well, why are the margins decreasing? Is it because of one of these outside economic forces
hmm
that is actually affecting the business in a real way? And then going forward and looking and talking to um, or analyzing and understanding what's a good action, like you mentioned. Should we start bundling products? Should we change our product, our service offering mix? Should we cut back on staff? Should we lean forward into R&D to build more products to be more competitive? Like which lever do we want to pull now based on the data, the tea leaves or the data that we've received? So I think that the cadence is also super important. That you can't just be looking at it every day, like, oh, we read the news and we're like, oh my God, we got to do this because, like the Feds just did this with the rates, or the president just launched some rockets, or whatever it is, right? And being super reactive, but at the same time, it makes sense if you don't do anything, like you said, then you might miss out on opportunities to react in time.
Well, even and that's a good point, and I'd like to even ask you a question too, Chad. Is even just like I guess how often business should because we talked about having financial forecasts and but like how often do you think businesses should really kind of revisit that forecast and some call it economic stability, I guess. I mean, what are your thoughts on that?
I think it depends on the business. Like for long, like I worked in like with a company that transformed aluminum. It was based on an aluminum factory that made they bought like basically raw aluminum and shaped it into aluminum profiles like windows and different uses like that. And there was a couple of different purchasing models, and one of them was basically based on a formula off of the stock market, like the commodities market, right? And so not that there's any direct influence that they had on the commodities market, but they needed to watch the market every single day
Yeah.
because there's a game of like, okay, well, if the price is low today and we predict that prices will be going up in the future, maybe it makes sense to make long-term, at least lock in part of our future consumption based on today's price, right?
Okay.
And we can say, well, we're going to buy 10% of our consumption at today's price, and we're going to hedge our bet that the price will go up, and we'll be able to make extra money because we've locked in this low price for a short period of time, right? So that's an example of like the people who are responsible for purchasing need to be looking at that every single day and being like,
hmm
okay, how are we at today? Does it make sense to make a move today, or does it not make sense to move today? Let's look at the long-term projection for understanding how that which part of the cycle are we in? Are prices going down? Are prices going up? Et cetera, right? So and that's an example of somebody who's like a daily. Other businesses, like I don't know, like an accounting practice, doesn't really need to worry too much about the daily price of aluminum on the stock market. It's more of like, okay, well, we just need to understand. Are we looking at, um, you know, funding cycles, interest rates, inflation? How are we being competitive? Or a software company, we have the same issues where it's like, okay, well, is there global issues that are causing inflation to eat away at as you mentioned before, purchasing power? So I feel
hmm
like that's one of those things where it's like that could be something that in times of relative stability, maybe you look at inflation once a year,
Yeah.
you know, and other times where things are more hectic and there has been significant oscillations in pricing, like after 2021, 2022, after COVID, maybe there's something you look at, monthly or quarterly to make sure that you're not getting squeezed into and losing profitability. So I think there's no one right answer because it depends on both the industry and the economic times.
That's such a good point, and very interesting too. But yeah, you kind of hit on the home of the two sides there. With the company that is primarily the aluminum and focusing on a lot of factors in the stock market compared to like the accounting firm where you might not have to worry about some of that stuff.
So there's stuff to worry
Well,
about.
there's always stuff for sure. Or maybe the
Like,
clients, they affected too.
and actually, there's like the other thing that another thing is actually another current issue is the tax bill that's in the Congress is debating or considering passing right now, which isn't exactly a macroeconomic issue, but there's decisions that can be made whether or not, depending on what actually happens now, will determine good actions for both future investment for tax saving purposes, and it will affect the industries like the solar industry, for example, and the electric car industry, where there's a significant amount of tax benefits that were passed under the previous administration, but now they're being looks like they're being pulled back, and it's like, okay, well, that could significantly affect those industries, and so that's an example of like, well, in the previous administration there was nothing to worry about. We need to look at it maybe once a quarter, not even once a quarter, once a year, once every 2 years. Now
Yeah.
it's like, okay, well, are we looking at this day to day? Because if this falls through, we will have a significant impact on our industry and people's ability and interest in purchasing the things that we are selling. So, no, like I said, no one right answer. It kind of depends, which is our
So
favorite
yeah,
accounting answer.
I love it. No, that's great. Such good points.
But I guess the things that I feel like are the big takeaways I get here, I guess are using the risk matrix like we mentioned in episode 5 and developing it, and I think we even had a download there of a good one to use, and doing cash flow forecasting for various scenarios, like what if you know oil prices go up, what if inflation goes up, what if interest rates go up, what if the tax bill doesn't pass, and or does pass, one or the other, and then just kind of finding a cycle to go through, right? Like what is the right cycle? So, I don't know, any other takeaways for you?
Yeah, I mean, like when it comes to like those, call it, macroeconomics. I mean, these are, you can't control interest rates or inflation, but like you mentioned, cash flow forecasting is, just staying on top of it, to kind of understand the flow of cash is, cash is king. So just taking that proactive approach, you can, kind of navigate sometimes those choppy waters a little bit there.
Awesome, awesome. Well, good stuff. I think well, we'll provide links to some of the resources we mentioned here in the notes, and hopefully this was good, useful for you. And it was a pleasure to chat with you, Jeff. I think we're
Likewise,
good.
Chad. Thank you. Thanks, guys.
All right, take care.
See you guys.